Hi guys, Akiba back for another episode of the SlateCast. Today we're going to be looking at DeFi and how that can make an impact into real-world assets with some interesting use cases, one of which is something that I'm familiar with, and I can see massive potential for how this can bring liquidity on-chain and tokenize real-world assets in a way that can create a real use case in a sector it's pretty booming, to be honest. So if you're interested in that, stay tuned. I'm just going to run the intro and then we'll be right back. Doug, how are you doing? We're going up to the Christmas time at the moment. Are you feeling merry? Are you feeling jolly?
I'm feeling very merry. We've hit some major milestones in our community, so I'm happy to be positioned where we are today. So a very Merry Christmas for us at HiFi.
Fantastic. So if anyone isn't aware at this point, Doug is from HiFi and Crown Ribbon. So HiFi is a lending protocol, and Crown Ribbon is something quite new. Do you want to give us a little bit of a background on HiFi Finance and what you're currently offering and how that's going to be evolving with the partnership with Crown Ribbon?
You bet. So HiFi Finance is a decentralized lending and borrowing protocol, and our key differentiator is we do fixed rate loans. So the rate you lock in as a lender or borrower is exactly what you're going to pay, in sum, and so that is our kind of like differentiator in DeFi. Crown Ribbon, in our partnership with Crown Ribbon, it's our first foray into the world of real world assets. And so Crown Ribbon aims to be a custodian and auditor of horse syndicates, and we're working to bring on chain our first horse syndicate sometime in 2023. So the goal, of course, is with our partnership with Crown Ribbon to allow horse syndication owners to get liquidity against their ownership stake, and then also to have a really unique offering in the crypto Web3 world, where we've got a SEC compliant security offering that pays out a dividend and is registered with the SEC with our exemption there. So we want to play by the rules and kind of do something novel. And we're hoping along the way we disrupt the massive performance horse industry.
For sure. I mean, I mentioned in the intro that I'm familiar with it. I actually have a horse syndicate with a current syndicate in the UK, and I'm friends with the guys that own that, and I've done a bit of consulting for them. So I know how prominent this space is and how passionate people in this space are. I think one of the things that I would talk about is that some of those people are not necessarily massively tech savvy. What sort of things are you looking to do? And that's obviously a big problem with Web3 in general in terms of the user experience, onboarding. What are you looking at in terms of an approach, in terms of like the customer journey for people coming into the space? How are you trying to sort of address that and make it so it's an easy on-ramp for them?
Yeah, when we imagine ownership and what it's like for the customers who are syndicate owners, I think initially it's going to be reasonable for us to target a crypto audience who are familiar with NFTs, familiar with holding them, and they'll have a new experience with like getting paid out a dividend and what that looks like in a compliant way. But as we grow, we need to move something that's closer to a Robinhood type experience, where it's ACH payments in and out, and the you've abstracted the HiFi protocol to the background. They don't necessarily care where the liquidity is coming from, but they just want to borrow at whatever interest rate that you have represented to them. So with you saw Stripe with their integration to make it easy to buy and sell tokens with a widget that you can embed into your website. I think 2 weeks ago they announced that. we're going to see more of these types of things. The MoonPay integration with Uniswap this last week that went live. It's getting easier and easier to come on
PayPal working with MetaMask as well now.
Yeah, that's right. So it has to be something that makes it seamless. I think a lot of these are kind of like, disparate little widgets that get embedded. Ideally, we're not having to distinguish exactly how the money's coming on and off. And it's just, you log into your Crown Ribbon app, and, this is how you access liquidity against your syndicate ownership, or if you're a rider, this is the platform you use to fractionalize and sell off, shares of your winning mare or stallion or what have you.
For sure. And what's going to be really interesting with this, just thinking about it, is the underlying value of the NFTs. It is going to be like semi-predictable to a degree. Like
That's
the
right.
performance of the horse, like obviously, like you say, like these horses are, for the most part, like insured real world assets that have a clear value. Like this is a horse that at market rate, based on its performance, will be worth a certain amount. So your NFT as a fraction of that is going to have a value. And I imagine the value of that NFT is probably only going to go down based on like maybe the length of the syndicate. Because will there be lengths, or will it be something that is just you have a share in that syndicate for forever? Because I know, like, I think my syndicate. Oh, actually, my syndicate just ended this October. Now I think about it, so I'm not part of a syndicate currently.
So excellent questions, very insightful. So for us, each syndicate will have a manager that is, basically has discretion whether or not they're going to pull in resources and continue to grow the syndicate. I imagine that most of these syndicates will have a thesis, and so that you'll be familiar with what they're kind of targeting. There's either going to be a certain size or a certain type of return that they're going after, a certain opportunity, and disclosed to people who are purchasing them. In crypto, we're sort of used to, we've been speed running like all the financial lessons that the world has learned in its financial history in the last decade. And so we've seen firsthand how things can become sort of irrationally priced. And I think that irrationality represents a certain type of opportunity for participants in the space. But even for us who are kind of like working behind the scenes, it's something that we have to anticipate and try and plan for. And so, there are going to be certain considerations that we make in, for example, we have to have safeguards for the lending protocol to make sure that things stay within certain rational bounds. And so we, have to account for this if this is something that does take place. But certainly a great problem to have. When we look at what impact that, if we just assert success on this and, let's say worldwide at scale adoption, anytime you increase the size of an audience or the number of stakeholders or buyers of an asset, typically you do see some amount of appreciation. So opening up an opportunity to more regular people who don't want to purchase land for a ranch and stables and a trainer and everything that goes along with running one of these syndicates, you can contribute $100 here or $1,000, whatever your appetite is, and get some skin in the game and follow along with the different horses as they race, as they breed, as they have different experiences in these assets life cycle. You really do expect that the value will appreciate, but find a new normal because you've got a worldwide audience that can have skin in the game. So it ends up being like a really great growth tool for syndicates, as a lot of these brands are about building notoriety and wanting to create some sort of sense of connection. There's no better connection than financial exposure to these experiences. I mean, these horses are just beautiful. And when you kind of get close to them and start to build an actual relationship with them and feel tied to them, it's a new type of product experience that I think is really easy to compete against. Just a chart in a spreadsheet, when you've got an actual living, breathing asset there that's going and racing. And I think that's what's thrilling about the whole offering.
Oh yeah, for sure. I mean, that's exactly how I chose my syndicate. I went to the stables and just fell in love with one of the horses.
Yep.
So as a result, you want to get involved. And I think my last question was actually maybe slightly misplaced. We just need to make it clear that Crown Ribbon is the framework for syndicates, rather than you're not offering the syndicates yourself, are you? You're helping syndicates to make these offerings. So in terms of the makeup of what the syndicate offers, that's going to be down to them, but you're opening up new opportunities.
Yeah, so there's three key things that Crown Ribbon offers. So the first is legal guidance through kind of the SEC process for filing what's called a Reg A plus exemption with the SEC to keep us compliant. And that, you have a whole bunch of disclosures that most of Web3 is not used to seeing, but given the world of Web3 today, I think transparency is very welcome. And with filing these disclosures, there are certain consequences for that give you a little bit better assurances of the truthfulness of what's happening. And so legal is the first kind of area of responsibility for Crown Ribbon. The second is actually the custodying of the papers of the horses themselves. And so, we control the ownership rights around these assets. So even if someone were to steal a horse, it's very difficult to monetize if you don't have the actual paperwork to go around with it. You can't enter into competitions. And so that gives token holders assurances that we've got them custody at a secure location. And then lastly, it is the actual issuance of the digital asset and audit, making sure that each syndicate has following certain standards and is able to disclose that and stay compliant with both the SEC disclosures and what we require, helping to protect token holders and syndicate owners. So those three areas: legal and issuance, and being able to audit and keep track of everything for token holders is the main role there. So any syndicate would be welcome to engage with that, and we're already working on kind of our first offerings there.
So then that takes a lot of the sort of the difficult technological innovation and also the legal side of it out, and then from there the syndicate is then left with not just a new way to raise liquidity as well based on the horse, but you've got an on-chain asset that means you can do airdrops. You've got a community that you can do interesting things with. Like you said, the dividends can be really straightforward. It's all on-chain. It's all transparent. The number of shares, I know there's been a couple of syndicates over the last 2 years that have run into trouble with selling more shares than they were meant to. I know there's one syndicate in the UK in particular that got done for that. So from a buyer point of view, you can check the on-chain information to know, okay, there is definitely only X number of shares here. There can't be any more because here are the NFTs. Here's the contract. I think that's brilliant. And then say that the opportunity to engage, because I think one of my favorite things about horse syndicates that are done well is say the Telegram groups that come along with it, with the horse updates, and you very much can get a sense of, like you very much rightly said, it's skin in the game and a stake in ownership without all the hard bit as well, because you could also buy as many NFTs as you want to get as big a stake in that horse for the dividends. Because I assume the dividends are related to prize money. Is that correct?
So there's a couple of different ways that you cash flow a horse syndicate, and the primary way is actually through reproductive output. So as your horse wins and gains a reputation, you basically sire them off, and you either wash the eggs, embryos, or harvest out the semen, and that is where the big value actually ends up accruing. And so after your horse has kind of run the circuit and created a name for themselves, you look at kind of lifetime earnings. But the real way that you make money in the horse industry, I'm learning, is actually through harvesting out the reproductive.
Yeah, so the breeding part of it. So there's quite often different types of syndicates. So I'm aware of, there are breeding syndicates. There's pin hooking, which is another aspect of that translates across the ocean. So pin hooking is where you're buying horses before they're ready, and then you're selling them you're basically raising them to be racehorses and selling them before. And then you have the traditional racehorse syndicates as well. So all of those could be tokenized as offerings.
Exactly. And so we try to make it really, this is a value add proposition to existing syndicates. We want them to do what they're good at, which is raising horses, running their operations. And we want to just bring them new tools, opportunities for liquidity, and a global audience that they can get access to, because, all you need is the internet connection and some sort of on-ramp to, get access to crypto to access this worldwide audience.
So I think, not aside from this, but based on this, one of the most interesting things that you mentioned to me just offline was there's no way to raise capital on a racehorse at the moment. And you're now offering a solution to that, so that if you've got a racehorse that's worth a couple of million, because some of these are very expensive assets, and you need to get some liquidity, you're kind of stuck with either selling your horse or maybe trying to find someone else to come in on the horse with you. It could be quite difficult, but with what you're offering a tokenized way so that you can get liquidity from an illiquid asset. And for me, that as a use case and a case study is what's actually one of the most exciting things for what else we can do this with going forward. Is that something you're consciously thinking of?
Yeah, so when you look at it, the horse industry is quite antiquated in terms of what tool sets it has in order to hedge risk and access financial liquidity. And so, what we're hoping is that not only do we bring more people into the sport and grow the sport as a whole, but that we honestly bring more maturity to the market that's here. So when you get down to the base level, a lot of these, cowgirls running barrel races or jockeys, they themselves don't have access to liquidity to hedge out of position. Say they get lucky one year and their horse is, just winning. It's important for them to be able to take some money off the table so that they can guarantee that they can run again next year. In the next race, their horse could break a leg or some sort of injury happen and their year could be over, and it can set them back, a whole decade in that industry. People need tools to sort of capture value when it's there, hedge out, and allow for risk to be tokenized between parties. And that's really what this represents is, syndicates are very good at sort of grouping together, risk of a large number of horses and allowing you to hedge out of, any one specific failure. The most valuable horses actually carried life insurance policies against them. And so you see kind of a little bit of nuance to what tools they do have, but you can't take your horse to the bank they and get a loan against it. They lack the knowledge and expertise. And so the hope is with Crown Ribbon and our partnership there and the expertise that we've brought in house, that we can actually help riders and the whole industry hedge out of risk, make offerings, fractionalize different horses or different aspects of their industry, and introduce them to a Web3 more mature financial infrastructure and large audience. So it's kind of a whole smorgasbord of opportunity. But at the end of the day, we're really hoping to position Web3 as a value add proposition to the entire industry.
I completely agree with all of that. What I was kind of getting at with the second part of my question there was, do you think this will also help set a precedent for other real world assets and gaining liquidity to what is currently deemed like other illiquid assets, like I don't know, certain antiques that people may have, or even like buildings, for instance?
Yeah, so real estate is very different than say high-end art or collectibles. There's a different additional layers of regulation there. And so that's kind of its own beast, and I think why it's kind of popular right now to start experimenting with that in sort of isolation. The truth is, it will model very well to a certain subset of assets, say high-end art or collectibles. The process can be the exact same. You can throw together essentially a syndicate that is a holding company for the high-end art, and art is actually a little bit more liquid than horses from my understanding. And so you can fractionalize it, then you can create liquidity pools, then you can consume it with other parts of DeFi like lending protocols like HiFi offers. And so absolutely, it lays the groundwork, and it's ideally going to be a pattern that we can reproduce across different industries as we take our learnings and apply it.
So within the Web3 space, especially for people that are listening that are very familiar with sort of general Web3 tooling and say governance and such, HiFi has HiFi DAO, I believe, which you said you've newly transitioned into. So how does the governance for that work? And is that something that anyone can get involved with? Is it something they can just purchase the tokens and join the DAO?
Yeah, so we're on Binance, Upbit, Uniswap, and so those who want to participate in that governance process, absolutely, you can purchase, our HiFi token. And so when it comes to kind of the governance relationship there, the key thing for token holders there is to there's a relationship with Crown Ribbon that is going to have to be somewhat pioneered, where the lending protocol is in charge of the terms on which it is willing to lend. And so Crown Ribbon will represent a certain type of risk to the DAO. And then the DAO, is going to consume that information and make recommendations on terms of, how much loan to value are we willing to do? How liquid is this asset? Let's imagine some nightmare black swan type scenarios. How does the DAO dig itself out? What does bad debt look like for this type of asset? Does it need an isolated pool of liquidity? Is there someone else who's willing to underwrite for a fee certain unlikely events? These are all things that HiFi will have to govern themselves, because ultimately they own the risk of bad debt on their protocol.
So currently, how decentralized is the DAO? Because I'm kind of very cognizant of, I mean, I'm all for decentralization, but with startups especially, I am personally of a view that centralization is kind of very useful at the beginning, because you can get things done and moving into a more decentralized sort of environment. So at the moment, how much of the control is kind of out there in terms of the public, and how much is within kind of the people that are running this day to day?
So that's a really good question. So in a typical token scenario, so we ICO'd in 2017, and we had, the whole gamut of people backing us, just kind of across the board. You can go look at those investors. And so you've got kind of those early token allocation, and we have been through multiple pivots since then. And, all of our early investor tokens, have completely vested. When you look at our team, even myself, I'm not the founder of Mainframe. I took over about 2 years ago, and we pivoted into DeFi. And so there's not this founder's allocation of tokens that I ever received. And so anybody who was kind of an early part of Mainframe, all of their tokens invested. And, we've been through multiple, bull and bear cycles already. Those who have wanted to sell have already moved on. Those who have, if you're still here, it's either because you forgot about your tokens or you actually want to be here. And so anyone with a material amount has long since left or is here to stay. So when we look at kind of the opportunity in front of us, there's some big opportunity with real world assets that I think is why people are interested in us today. But so to answer your question specifically about decentralization, with our token swap, the core team has a 2-year contract with the DAO, and they have 19.8% of token supply that vests linearly over those 2 years. Now that doesn't go to one individual; that actually funds our operation. And so if we were to hit a bull market, then we might in our modeling, if we hit a bull market and we're able to the value that was distributed to the core team multiplies by some multiple, then there's an opportunity for equity holders of HiFi Labs to capture value there. My best models kind of keep that limited to around 10%, which would then is already owned by many parties on our cap table. So you've got, I guess, one chunk of 10% that in our models could be controlled by heavily influenced by myself. But I and I think if you looked across the board, we're likely one of the most decentralized token groups out there because of our sort of speckled history and the pivots and the the fumblings that we've had along the way. So it is a very good question, and it's also one that I think we're really positioned well because of our history.
Yeah. Yeah. No, I think that sounds really positive from my point of view because, like I say, like ultimately DAOs are great, but on the day to day, you've got to get stuff done. So you've got so your team has got a 2-year contract with the DAO,
That's
so
correct.
you can just get on with stuff. You're not having to go back and do like a governance vote every time you want to look at doing a new product, for instance. You can run the business and build it out, and the big decisions are then decentralized. Sounds great.
Yeah, I mean, our business is actually separate from the DAO, and so we have I have a fiduciary duty to our stakeholders, and the nice thing is with a token allocation that was just granted by the DAO is we have alignment for that. We very much want to see a multiple in the token itself, and so making sure that type of alignment was super important to us in our token swap, and so we've made sure that opportunity is there. There's also circumstances in which at the end of the 2 years, depending if this is a prolonged bear market, where we actually just end up using the resources to pay salaries. There really isn't upside involved there, and I think that was a fair trade-off for us. But governance, really concerns itself with the risk parameters around which assets to list and what terms they want to put around those loans. And then like major upgrades if we're going to add staking or these types of things to the token economics, and then resource allocation to ourselves, other groups that the DAO wants to engage with for helping to promote different ideas or to seed different opportunities that become available to us.
So what's the roadmap look like? Obviously, HiFi Finance is something that's available and people can use.
That's right.
But the crown ribbon, you say you're currently working with a syndicate at the moment. You said sometime in 2023. Are we looking? If you had to like Gunty, I'd have to say, are we looking early 2023, more like Q3, Q4?
So my best guess today is Q3. And the reason why is I think a tip when we've talked to our lawyers, a typical Reg A exemption takes about 6 months, and they say because we've got the tokenized layer, they're saying that it might take 9, and so which is the price you're going to have to pay in order to do things by the book. And so on the crown ribbon front, that is kind of what we expect the timeline to be. Could be faster, could be slower. It is just a lot of patient waiting back and forth between our lawyers and the SEC and making sure we do everything right with our first syndicate offering. Behind the scenes, we've got a syndicate we're working with. We haven't announced those horses or done really any marketing around them because we're not doing that offering yet. And then for HiFi, we've got our deployment on Ethereum mainnet coming up at the beginning of January, and then ideally we're going to see our liquidity infrastructure, which lays the groundwork for some tools that Crown Ribbon will need to consume, happening in the first half of this year. And so there's lots of progress and kind of groundwork that has to be laid to even get ready for that official offering, so that we have the liquidity pools, so we have the price oracles that can be consumed by the lending protocol itself. So so our roadmap looks like a lot of building everything from organizing the actual horse syndicate and finalizing kind of the legal there, working with the SEC, building the platform for Crown Ribbon, getting the lending protocol on Ethereum mainnet. We're on Polygon currently. So that's getting deployed in early January, and anything else that kind of comes along the way in terms of development needs.
So anyone that's got excited about the idea of real world asset NFTs and horses, what's the best place? Is it the Discord? Is it your Twitter? Where can people go?
Yeah, so typically with us, following the Crown Ribbon HQ Twitter handle is where you're going to find all the major announcements along the way. Getting more involved with kind of like the supporting infrastructure and kind of the excitement that leading up to the Crown Ribbon release is going to be in HiFi's Discord and Twitter. So that's where most of the action is happening. And then material announcements will be pushed out through the Crown Ribbon social channels as we get news back from the SEC or have product announcements ready.
For sure. And anyone that wants quick access to that Discord, so HiFi.finance, scroll to the bottom and there's links to the Discord there, or the actual swap protocol, which is swap.hifi.finance. The button is right there, as well as the Twitter. And just go through the Twitter. So it's Crown Ribbon HQ, did you say was the handle on Twitter?
That's correct. Yep.
Yeah. Fantastic. Well, I will definitely be keeping track of that. I'm not currently in a syndicate, as I've just realized right now. So I'm completely down for 2023 to join one. And I've been thinking that this is a space that is just absolutely prime for NFTs, but needs someone smarter than myself to implement it. And it sounds like you're working in all the right directions for that. So real world assets, something I've heard a fair bit about in the DeFi space. You're one of the first I'm seeing that's actually got a development plan with a timeline that can actually release something. And I think horse racing and horse breeding is something that is definitely got a global audience and a global appeal, right? Because I mean,
absolutely,
horse racing is big in a lot of countries. I'm in the UK; it's massive here. I know it's big in India, it's big in Ireland, it's big in the US. So
yeah, it's a $300 billion industry. So it's there's a lot of value there, and it's so antiquated. So we really do hope to disrupt the whole thing.
It's definitely ready for disruption. It needs some new tech put into it. And I think if you can help with that onboarding process, make it streamlined, you're talking about like Robin Hood type experience. I think that's exactly what it needs. And that could be absolutely killer. So I'm super looking forward to it. Doug, it's been such a pleasure talking to you, my friend. And yeah, we'll speak again and let's stay in touch. So remember, everyone, head over to HiFi.finance for the links for how to get involved. I think the Discord is definitely going to be a key one there because you've got other links in there to find out, get involved with the community.
That's right.
And yeah, for this episode of the SlateCast, remember to like, comment, subscribe, all that good stuff. And we'll see you in the next one. Goodbye.
Goodbye. Thank you.